Jennifer Geddes with Keller Williams Realty. Today I'm going to talk to you a bit about mortgage interest rates, and we luckily have Jason Fallon with Movement Mortgage here to join us today.
Thanks for having me, Jen. Hi, everyone.
Hey, Jason, thanks so much for joining us. So interest rates have obviously been a super hot topic and have been on the rise. So just wanted to talk a little bit about that today. So I know interest rates have been at historic lows for several years. Can you explain a little bit about why that was?
Yeah, rates were low for the last couple of years, mainly due to COVID. The economy was sputtering, jobs were being lost. The economy was shrinking. So the Federal Reserve got involved to try to free up the flow of capital and try to make it as easy for people to do business, and also allow for clients to potentially refinance mortgages and save money and take advantage of these lower interest rates. So yeah, rates have had historic lows for the last 2 or 3 years, and people have definitely taken advantage of that opportunity.
Okay, great. And then can you explain a bit about why interest rates are on the rise now, as we've seen in the news and has really, become a hot topic?
Yeah, rates were artificially kept low for the last couple of years, as I just mentioned. So, everything happens in a cycle. So what goes down must come up, unfortunately. So we were going to see rates go up subtly, but then we were kind of hit over the head as a country with inflation, which is kind of at 40-year highs. That's been pretty historic itself. And with historic inflation, the Federal Reserve is taking drastic measures basically to, make sure that in order to fight it, their only toolkit is basically making sure that rates move higher to basically offset that inflation and try to bring that under control.
Okay, makes a lot of sense. So, for example, since January compared to early April, how much have you seen rates actually increase?
Yeah, it's a great question. I think since early January and at the end of last year, rates were still in the very high 2% range, 2.875, maybe 2.75. And now, as of early April, they've just surpassed 5%. So a little bit more than 2% increase in a very short period of time.
Wow. Okay. So for example, how much would that impact someone's monthly mortgage payment from the, January rate to the April rate then?
That's a good question too. So if we take a $400,000 loan size with an interest rate of 2.875 versus that same loan size, $400,000 at 5%, that difference is about $488 a month.
Wow, so almost $500 a month just because of the interest rate change.
Yeah, it's pretty chaotic out there, and unfortunately, rates are on the rise still.
If someone's considering buying, would you advise the buyer to wait or to purchase now?
I would actually still advise them on buying now. Rates are still going to continue to move up with all the data that we're seeing here. So you could see those payments rising even higher. So waiting isn't going to help matters. It's only going to make it a lot worse, in my humble opinion.
Okay, great. Thanks so much for sharing that information. And Jason's contact information will be in the link below. If you're ready to get pre-approved, reach out to Jason or myself. And thanks, Jason, for joining us. And thanks, everyone, for watching.
Thanks, Jen. Appreciate it.